G'day from Melbourne. It was a crispy autumn morning today, and while I was grabbing my favourite bev of the day, my latte, the news hit. Australia has officially passed its first comprehensive digital assets law. No more Wild West for crypto platforms. Bitcoin is trading at 105,000 AUD, 69,000 USD right now. Is this regulatory clarity the catalyst Aussie Bitcoiners have been waiting for, or just another layer of compliance headache? Let's unpack it. This segment is brought to you by CRYPTOLOGIC.com.au, your go to hub for in depth Aussie and global crypto news. The big local story. In early April 2026, the Corporations Amendment Digital Assets Framework Bill received royal assent. Exchanges and custody providers now need an Australian Financial Services Licence, as you may know it, AFSL. This brings crypto firmly under the same rules as traditional finance. Think stricter custody standards, better user protections, and minimum capital requirements. For Melbourne and Victoria, this could accelerate mainstream adoption. We've already seen growing interest in blockchain events here, and clearer rules might encourage more institutions and even employers to dip their toes in. But it also means some smaller players might struggle or exit. The goal from the government? Position Australia as a serious digital asset hub, not just a bystander. Globally, Bitcoin remains volatile but resilient. We're seeing mixed signals from US spot Bitcoin ETFs. Recent weeks had notable outflows, but institutional interest via filings and corporate accumulation continues. Morgan Stanley and others are pushing deeper into the space. Another key development, tokenization and stablecoins are gaining traction worldwide, with Australia's new framework aligning somewhat with global moves towards regulated innovation. Price action? Bitcoin has been trading in a range after earlier highs. At 105 AUD, 69,000 USD, we're watching support levels closely. Any major micro shift, like interest rate decisions, could send it flying or dipping fast. Here's the CryptoLogic takeaway. This new Aussie law is net positive long term. It reduces some risks for everyday investors and could boost confidence, leading to more adoption. However, overregulation can stifle innovation if not balanced. I am not a financial advisor. This is not I financial advice. Always do your own research and consider your personal situation. The key lesson here, regulation often signals maturation. Bitcoin started as an experiment. Now it's being treated as like a real asset class. For Aussies, self custody and understanding on ramps remain crucial regardless of the rules. Speaking of rules, why did the Bitcoin go to therapy in Melbourne? Because it had too many commitment issues with its private keys, and after the new custody laws, it's worried about getting locked down in an AFSL relationship. All right, back to it. Overall, Sash from CryptoLogic here, I am optimistic. Australia's move, combined with global institution flows, points to a more professional crypto ecosystem ahead. Stay informed, stay secure, and keep stacking those sats responsibly. If you're in Melbourne or Australia, what do you think of the new framework? Drop it in the comments. Like if this was helpful, subscribe for more, and hit the bell. Until next time, stay curious and stack smart. I'll catch you in the blockchain. Cheers.